Hello, everyone. Thank you for tuning into Nature's Returns. We're just giving all the participants a few minutes to filter in, and we will start in a minute. Hi, everyone. If you're just joining us, we are about to start in a minute, just letting people to filter in, and welcome, and thank you so much for joining us today. Okay, now we have a good group of participants and we will get started. Hello, everyone. Thank you for tuning into Nature's Returns. It's a webinar series hosted by the Center of Business and the Environment at Yale. My name is Angela Xue, and I'm a first-year Master of Environmental student at Yale School of the Environment, and I will be your host for today's webinar. We also have Sonia Wang and Charlie Governale in the back filtering questions and dealing with technical issues. And they are both second-year Master of Environment Management students. The Nature's Returns webinar series invite leading practitioners and researchers in the field of conservation finance to talk about the latest opportunities and developments in the growing field of ecosystem service valuation and investment. Today, we are thrilled to have Ricardo Bayon from Encourage Capital with us to discuss the future of investing in regenerative agriculture. We will explore how finance can support the transition from conventional to regenerative agriculture. Ricardo will draw on discussions with players up and down the value chain, from producers and processors to distributors and end users. To open our webinar, I would like to introduce our speaker, Ricardo Bayon. Ricardo is a pioneer in impact investing, committed to breaking traditional financial models that separate social and financial returns. He is the founder of Encourage Capital, a new breed of asset management firm focused on profitable and strategic investment to solve critical social and environmental problems. The goal of Encourage Capital is to build a community of investors, foundations, market-leading companies, governments, and nonprofits who are working together to address some of the world's most challenging issues while generating financial returns for its investors. Before we begin, we would like to remind our audience that we welcome any questions you might have, and we will direct them to our speaker. Please feel free to type questions directly into the Q&A window throughout the presentation and the discussion segment following. After Ricardo's presentation, we will transition into the discussion segment and take questions from our audience, and I will filter questions throughout the presentation and jump in, and we will have engaging conversations throughout the presentation as well. Ricardo, welcome to Nature's Return. Please take it away now.
Thank you, Angela, and thank you everyone for joining. So as Angela said, I work with a group and helped found a group called Encourage Capital. And we kind of take a slightly different approach to impact investing than a lot of folks out there. And the approach we take is that rather than focus on a specific asset class, whether it's private equity, debt, venture capital, or what have you, we take a look at big social environmental issues, and then we ask ourselves, how can capital help solve them? And depending on the issue, the answer may be private equity, maybe real estate, maybe debt, and we try to work with partners to come up with strategic solutions, raise capital, help address it. We've done a lot of work over the years on climate, carbon markets, plastics, water, what have you. But today I want to talk about some of the work we've been doing over the past year and a half or more on regenerative agriculture. And we're in the process of sort of trying to understand the space better, trying to figure out where capital can make a difference, and largely talking to people in the regenerative agriculture space at all the levels of the value chain, as Angela mentioned, and trying to figure out where can capital really play a role, where are the gaps, where are the problems, and how we might be able to help solve problems. So I'll just say at the outset, I prepared a deck. I can go through the deck. I can induce in all of you a deep state of PowerPoint narcosis if you let me. So don't let me. Throw in your questions. Let's have this be a little bit more vibrant. I know, the medium is a little bit difficult in that regard, but we'll do our best. I'm happy to be interrupted, so don't be afraid to interrupt me. And I know Angela will jump in with questions as well. She'll have questions of her own. But throw in your questions. Let's try and answer them as we go along. We don't have a huge amount of time, but I'll do my best. And I will consider this a success if I don't go through all my slides. So just remember that. All right, so let's get going. Why agriculture? Why is this so important? I'm not going to spend a lot on this because I think most of you probably already understand this intuitively, if not on the basis of your work. One of the reasons why I was particularly excited to jump into this space, and it's something that I've been wanting to do for years, is that I actually think how we produce our food, and I'll throw in there our fiber, so wood and paper and other things, is at the heart of most of the major environmental problems we face. So whether you're talking about water, agriculture is probably one of the biggest users of water in most major river basins. And you take a look at the Colorado River, it's 70 to 80% of water use is agriculture. Agriculture is also a key component of climate change, climate emissions. Agriculture is also at the heart of biodiversity loss around most of the world. Basically, so I think agriculture is kind of, if you pull on any of the major threads of our environmental and social problems, because if you look at health, nutrition, all of these things, you end up saying, if we're going to fix most of these major problems, which I believe are all related, you got to address how we grow our food, how we shelter ourselves, how we produce our fiber. So it's incredibly important. And I think one of the things that the reason we talk about regenerative agriculture is that we're looking at how agriculture can go from being purely extractive of natural resources and others, to one that is not just sustainable maintenance level, but one that is regenerative, that is actually building the soil, that is leaving things better than they were before. And this is an issue that you're going to get into when you jump into the space, no matter how you jump into the space. And that is the fact that there is no one definition of regenerative out there. I know there are people working on there. There are some standards, the regenerative organic standard that Rodale is working on, and others. So this field will evolve, and maybe down the line we'll be able to have a little better idea of what we mean when we say regenerative agriculture. But just for the purposes of this discussion, let's just leave it at that simple level, that we're looking for a type of agriculture that leaves the soil, the environment, the biodiversity, maybe at least somewhat better than it started, if not way better than it started. And this applies not just to traditional row crop agriculture, but also to ranching and other types of agriculture, right? So again, I think if we're going to address these big issues, whether it's health, socioeconomic issues, climate change, environmental degradation, we really have to figure out how we look at the way we produce our food. Now, it's also a significant investment opportunity that I think in some ways has been underinvested. Even if you take traditional agriculture, putting aside regenerative agriculture, which is wholly underinvested, right? There's very, very little money flowing into it, relatively speaking. But even if you take traditional agriculture, it's a huge source of revenues for most countries. I've put a lot of data here from the US because I'm looking specifically at the US and regenerative agriculture. There's a question from Peter Miles about if Encourage is solely focused on North America. No, we actually have a fund that's investing in solar in India. We've done work in Latin America. We've done work all over the world. Right now, we've decided that for the agriculture space, at least the regenerative agriculture space, we do want to look at the United States because we think there's an incredible opportunity. But I'm Colombian. I was born and raised in Latin America. I would love nothing more than to do this work all around the world. So, basically the point of this slide is that there is a huge amount of potential for farmland investment. There is, and this is data from a little while ago, 21 billion that we can see of institutional investors in farmland assets under management, right? I think a lot of that, if we were to dig into it, is probably land. It's probably buying land and managing land or subletting land or converting land to some different type of agriculture, whether it's organic or something like that. But when you think about it, when the scale of the opportunity and the fact that it is just such a central component of all our lives, how we produce our food, it's a very small investment by institutional investors. So what we've seen in the last 5 years, maybe 10 years, is we've seen an incredible growth in the amount of institutional investment in farmland and in agriculture. And in a way, it mirrors the kind of institutional investment that came into forestry. The way these sort of institutional investors work, sometimes it feels like it's a kind of flavor of the month approach. Somebody somewhere decides, oh, we're underinvested in forestry. And in this particular case, it was probably the asset managers at the Yale Endowment way back when decided that forestry was a great asset class and something that you needed to invest in because it was not correlated to inflation, and you had a bunch of other great properties from an investment portfolio management standpoint. And they said, okay, we're going to allocate a percentage to forestry. And then everybody started allocating a percentage to forestry of the institutional investors. And then pretty soon you had billions and billions and billions of dollars going into forestry investments, because even a small percentage of the money that institutional investors invest can be a very large sum. I think we're in the process of undergoing the same thing now on agricultural investments. I think people are realizing that farmland investments can be a huge potential opportunity. A lot of that is going to traditional agriculture. Not enough is going to organic or regenerative agriculture. So I think that it's important that we try to shift even a small portion, but hopefully a larger portion of that money into regenerative agriculture. There's a lot of macro trends: rising food prices, consumer demand, environmental threats, interest in climate change. And there's trends in terms of price premiums for organic, which is something we have a certification for. Nothing really on regenerative yet. Large market growth, potential for natural resource rent generation, et cetera, et cetera. All of this to say that this is a growing asset class, one where there's a tremendous opportunity for investments, a tremendous opportunity for impact investors. We talked a little bit about what is regenerative agriculture. Nutritious food, less chemical impacts, prioritizes social fairness, has climate change resiliency and carbon sequestration. And I see a question again from Peter as, do you consider soil sequestration and carbon credits will provide a commercial, I guess that's impetus to regenerative farming? Possibly, yes. I think there's a lot of issues to think about when you're talking about carbon and carbon sequestration in agriculture. One of the reasons why many of the carbon offsets that are out there don't really focus on agriculture is that it isn't as straightforward in many ways as forestry. Because when you're talking about climate change and how it relates to agriculture, you're looking at three main gases, not just carbon dioxide and carbon in the soil, but also methane and crucially, nitrous oxide. Nitrous oxide is a gas that has a much, much bigger basically impact on global warming than carbon dioxide, several hundred times the impact of carbon dioxide. So, you can sequester 10 tons of carbon in the soil, but if you emit 1 ton of nitrous oxide, you're basically nullifying those results. And nitrous oxide in particular is difficult to measure at scale cheaply. So you can cover a piece of land with a tent and measure emissions of nitrous oxide, but you can't really do that at scale. And it's so variable depending on acre for acre for acre that even if you measure 1 ton emissions in 1 acre, doesn't mean the next acre over isn't emitting more or less because it has to do with soil biology, it has to do with humidity, it has to do with a lot of other things. So we haven't quite solved exactly how to deal with carbon in agriculture. We are getting there. And I think a lot of the impetus lately has been around modeling. So understanding what are the biogeochemical functions that are going on and trying to model across certain soil types and across certain crop types. And that will give us a general idea of how much carbon is being emitted or sequestered. But it's not measurement. And so we have to get comfortable with those models, and we have to ground truth those models. And as a system, the system of carbon sequestration has to manage those models much more better. So I think it's coming, and I think we're seeing movement at USDA and other places. And I think the carbon markets have grown in a way that I have never seen them grow over time. And so I think that this is going to be a major area of investment for at least the next couple of years. This is the carbon markets 3.0 we're living in now, right? We've seen this before. We've seen growth in carbon, then a retrenchment, then a growth, then a retrenchment. This is almost the third or fourth cycle in carbon markets. This one is way bigger than any of the ones before. So I think it can provide a really important impetus for agriculture, but we just got to do it right. And I see Peter Stein correcting me. I'm always open to being corrected by Peter. He's a good friend and has been at this for many, many years. He says actually agricultural investments in conventional agriculture predate institutional investments in forest land. Totally agree. But I think it's more of a flavor of the month now than like forestry was in the last decade. And Peter knows both of these things very, very well. But I think there is a difference in what's happening now to what's happening before. And I think it's even sped up in conventional agricultural now, and conventional agricultural land and institutional investments in conventional agriculture have sped up now. And I do think that I agree with you that we need to figure out how to move money to regenerative agriculture. So let's talk a little bit about that. I think the way I look at regenerative agriculture and what's happening in the capital space now, I would say there's sort of two trends that I see happening. On the one hand, you have a trend for large producers of food trying to figure out how they tap into this growing interest in regenerative agriculture. And the way I would in my own shorthand refer to this is the question there is how to make the bigger better. In other words, entities that are already at scale, whether it's Danone, Applegate, huge food producers, how to make the way they produce food better. I think there's another very misunderstood and underserved trend that needs to happen, and that is how to make the better bigger. In other words, there's a lot of farmers out there that are already doing what you and I might consider regenerative agriculture. And the question is, how do we get them to scale? They are currently smaller. It's difficult to scale. You get into all kinds of issues with transaction costs and how to scale, and it's difficult. So I think we need to look at these two separately, because the capital needs and sources of capital and how that capital will flow are going to be quite different. if you're investing in a Danone or if you're trying to scale the work of smaller farms in a particular food shed. I think,
Ricardo,
yeah.
I'm going to jump in here with a question from the audience, just tying into what you just talked about, how to engage farmers.
Mm-hmm.
There's big farmers and smaller scale farmers. Sydney had a question about how she understands that farmers tend to be a conservative group. How do you go about convincing them of the value of regenerative agriculture, which undoubtedly will change their traditional ways? And additionally, for many farmers who are already pioneers in regenerative agriculture themselves, how can we partner with them to help change the broader industry?
Yeah, no, that's an incredibly good question and a very difficult one to answer. And how do you move a conservative group of farmers? I think has been an issue for agricultural extension services and change for many years. And the answer is it's very difficult and it takes a lot of time. And in some ways, the shift is probably going to be a generational shift. And that's another huge trend that I think we're seeing now is farmers are aging and the median ages are very high in the 50s and 60s. So I think we're actually seeing that generational shift happen now. And so I think the real change is going to come when a new generation of farmers comes online. And that's also another reason why I think we haven't seen the adoption of technology tools in agriculture to the extent that they are in other industries. A is that issue that farmers are conservative, and B is that the aging farmers didn't grow up with these technologies the way, your generation, Angela, and others are, kind of digital natives. You grew up with this technology, you know how to use it, you feel comfortable with it. It's not as big an issue as for, somebody maybe my age. And so I think we're seeing that generational shift. So I think that's going to do two things. I think on the one hand, it's going to facilitate this transition to a different type of agriculture, to trying new things. And we're seeing a bunch of younger farmers jumping into the space, and even people who weren't farming before coming into farming. And the issues they have are access to land and how to actually get land and how to have the capital to do that. And we can talk about that. But that new generation is also going to be adopting new technologies. And I see some people are asking about blockchain, which that's a whole nother rabbit hole that we can get into. How to deal with blockchain and the role that blockchain can play in all this. We're already seeing examples of blockchain being used, for instance, in carbon. Groups like Nori or Regen Ventures are interesting groups to look at in terms of how they're trying to use blockchain to address issues of trust and certification, as well as raise capital to do things in the regenerative space. I'm happy to go into more on that in the Q&A session. In terms of how do we help farmers and how do we bring them along, I think this is where it's important to focus on some of these challenges up here, right? One that I see, and again, you got to separate the two. On the how to make the bigger better, I think that side of the equation has the capital, the Danones and the huge producers of Land O'Lakes and others, they have the capital to make change. They just need the willingness, and they need to be pushed by consumer demand to make the change. We're seeing that already. People like Timberland, Danone, Cargill, others are all giving lip service to regenerative agriculture. Some of them are actually doing really interesting work on regenerative agriculture. They are financing it in a way themselves, and they are, also investing in. There's funds out there now aimed at this sort of level. I'm thinking of Replant and Capital and others who are setting up funds to invest in how do we make that bigger, better, and how do we buy land? How do we transition land? And one of the important things to realize from an asset management perspective is that asset managers want to be big, right? The way they make money is by assets under management and a percentage of assets under management, certainly in the traditional investment models. And so it's no wonder that a lot of that institutional investment, the large scale investment, is going into land investments because land is expensive and costs money, and they can deploy large volumes of capital. On top of it, the sort of risk return profile of investment in land is relatively conservative because you have the land underpinning your investment. in a way as collateral to your investment. So, that land will still be there even if everything else fails. So, in terms of a risk return profile, it's relatively, low risk, low return perhaps, but also low risk. So a lot of money is going into that. And I think even a lot of the money that's going into regenerative agriculture is going into land investments. Where I see a huge need is in the other side of that equation, which is how to make the better bigger, right? And there, what I think we have is an issue of supply chain dislocation, disorganization. I think it's very hard for producers to find processors, to find distributors, to find buyers. It happens often by word of mouth. And that word of mouth is ineffective and inefficient. And here's where I think new technologies can come into play that I think are going to be interesting. And how do you make those connections? How do you articulate that supply chain in a much more efficient, effective way? Also, the type of capital they need is very, very different. When we started this exploration at Encourage, one of the things we saw was that we thought maybe debt is the answer, right? But on talking to a lot of farmers and others in the value chain, we realized that in many cases, small farmers are already over levered. Plus, they have access to relatively cheap capital in the U.S. from USDA, FSA, other of these acronyms out there. And so, debt has to be the right kind of debt for it to work in that particular case. It can't be the sort of large-scale debt that traditional finance provides, because oftentimes, they're over-levered and they don't really want to take on that level of debt. And so it has to be the right and appropriate capital, often at smaller scales, often much more time-bound in many ways. And again, this goes against some of the pressures that are on capital, which is bigger is better in terms of capital allocation models, because you get economies of scale. Making one investment of $10 million is just as easy as making one investment of $1 million in terms of transaction costs, contracts, legal fees, et cetera, et cetera, et cetera. So from a capital provider perspective, there's a big push to making it bigger. Whereas from a borrower perspective, particularly if you're talking about small scale farmers, that is not necessarily the case. So how do we solve that problem if we really want to make the better bigger? And so I think there's sort of these two angles if you're looking beyond the sort of big Cargills of the world, right? You need to strengthen the regenerative supply chain through this capacity building and coordination on the one hand, and then you need to provide innovative forms of capital that has the right timing, the right size, and the right look of it for these small scale providers. And that's kind of where we're landing. We're kind of landing at this space that, actually what's needed and where we may be able to help provide a role is in trying to set up a sort of new type of startup that tries to make this supply chain more coordinated using technology tools aimed at this new, younger generation of farmers, while at the same time using information that is garnered from that work, which can look like a specific social network for regenerative agriculture, using information about who's talking to who's buying from who is a reliable provider, who's a reliable distributor, to make lending decisions or capital provision decisions. So gaining that information. And also borrowing from the work we've done in many emerging markets on microfinance and how do you lend to the quote unquote unbanked or unbankable, which are people who don't have the scale or the credit rating or some of these other components of traditional borrowers. And I think it can be done. And there's a lot of innovative tools about how do you use existing information to understand credit risk that I think we could use in this agricultural space. So we're working on a startup that we've provisionally called Foodling Capital, which hopefully does just that. But I think there's a huge opportunity to provide capital to this new generation of farmers that wants to farm things more regeneratively and do things differently. But I think we need to figure out how do we deal with this issue of scale in a bigger way, right? It's possible that these two sides, right, the how to make the bigger better and how to make the better bigger, will meet in the middle, right? Because Danone is looking for somebody to provide them the milk for their yogurt or whatever, and maybe we can connect them to people that are doing regenerative. And I've heard from many of these large distributors or CPG groups that they have trouble finding sources of supply for regenerative goods, right? And that's part of the work that they need to do, is finding better sources of supply. I also think that one thing that's incredibly important is how do you actually connect the producer to the processor, to the distributor, to the end user, and in a connection that has to be a lot more seamless than it is today. And I think we're going to find that a lot of the volume of the capital that is going to be deployed in these models is not necessarily going to go to the farmers. They may need smaller volumes of capital, but it's actually going to be in the processing and the distribution that you're going to need a lot more volume of capital. Why? Because oftentimes in a regenerative system, part of the bottleneck is processing, right? So let's say you need to do a nitrogen fixing legume crop. Well, if there's no market, no processor for that legume crop, it's harder for you as a smaller farmer to sell it, to use it, to distribute it, right? So it becomes a bottleneck for you to doing the kind of crop rotation, the kind of regenerative practices that you need. So I think there's a way to put these two things together, which is the supply chain, how to make the supply chain better, and providing the right types of capital to farmers on the ground. And I think that's really where I think there's a tremendous amount of potential for innovation out there. It's not going to be the natural place that large institutional investors gravitate to because of all these issues of size, scale, supply chain. So I think there's going to be openings for new entrants in the space to serve that role and that purpose.
Yeah, Ricardo, I'm going to jump in here with another question, just tying
Mhm.
into how to make the better bigger, and also tying into the previous discussion about farmers' attitudes. So on the point of farmers' attitude and also the problem with debt access, how do you see farmers' attitude? How do you see, like, to what extent do you think underlying business issues like the eligibility requirements for crop insurance support are more of the issue than attitudes? And what is an investment group's role in addressing these issues?
Yeah. I mean, I think insurance is an important component of this, right? It's not just going to be providing capital through debt or equity or other structures. It's going to be the full suite of the financial services that need to adapt to a new model. Insurance is part of it. I think one of the issues that I find particularly interesting, potentially compelling in the insurance space on agriculture is how we understand the value of land, right? At least theoretically, land that has better soil, better management, better biodiversity should be more valuable. And therefore, insurance premiums and others should reflect that, as well as, the value of the land, underlying value of the land. Appraisal systems need to come into play as well. You can't, just because it's an acre in North Dakota and the neighboring acre in North Dakota doesn't mean they're the same. It can be, but it can also be that one has been managed very, very well, where nutrients are continually being put into the land, where biodiversity in the soil is much healthier, much better, which will allow you to increase yields, to be more resilient to drought, more resilient to pests, more resilient overall. That should be more valuable. In our current system, I don't think we have the appraisal systems, the insurance systems, all of these structures to truly understand that value. And that goes on to a bigger problem in our economic system, which is this concept of externalities and ecosystem services and how those are not valued in our economic system. But we're going to need to solve that for agriculture as well. And then you also come into all kinds of issues, and I see there's a question about policy impacts and basically regulations in space. I think it's important to have the right regulatory framework as well. Until we do that, where it's going to be very difficult to move the needle, it can be done, but it's just going to be more difficult. So policy on carbon markets, which, for agriculture, which is starting to happen at the USDA level, policy on crop insurance, drought insurance, fire, all the different types of insurance will also play a part in how these things happen. So, I do think those things are important. And the person who asked that question, how much do you think investment can accomplish without large-scale U.S. food policy change, or thinking of the ag bill and corn, soy subsidies? Yeah, all of those issues are incredibly important, right? We spend a ton of money subsidizing corn and soy type of agriculture, large-scale agriculture. We need to spend a lot more subsidizing the kind of agriculture we really want. It's the same thing with climate and subsidies for fossil fuels. We spend trillions in subsidies globally on fossil fuels. And then we talk about how to address climate change. Well, and that we can't pay for some of the things that need to happen on climate change. Well, if you took away some of those subsidies, you probably could pay for a lot more. And the same goes for how our agricultural system is set up. It's going to be difficult to change. I have no illusions about that, partly because, sort of the large scale agricultural system or producers have a tremendous amount of lobbying power, have a tremendous amount of wealth, have a tremendous amount of organization that they can put to bear on USDA and regulatory bodies. So it's going to be difficult to change that, just as it's been difficult to change subsidies for fossil fuels. But I think that work needs to begin. And it's also important to realize that the Farm Bill is one of the biggest providers of capital for agriculture in the United States. So how that Farm Bill gets spent, and in particular how the conservation title of that Farm Bill gets spent, is incredibly important. We at Encourage were asked by USDA a bunch of years back to kind of help them think this through and to think about how could you change some of the conservation title of the Farm Bill to make it more efficient, more effective, and to leverage private capital to increase the impact of that Farm Bill. And, I think basically the conclusion we came to in that report, which is available on our website, is that you first need to understand where are the places in the agricultural system that private capital could invest in, i.e. where there is a return, and begin to think that maybe that's not where USDA money and Farm Bill money should go, but rather start, putting incentives that lower the risk or increase the return for private capital so that more private capital flows into these places where it could make a return. And I'm thinking about, lowered use of pesticides and fertilizers. I think that can generate a return. And start thinking about places where it's harder for private capital to come in and see how public capital can go into that. And if you think of it that way, you can actually increase your impact and lower your spending on the Farm Bill in some ways. And a lot of this and the thinking behind it and examples are in that report we did for NRCS. So I'm happy to go deeper into that. But yeah, the role of regulators is a hugely important one in this space. That was a long-winded answer.
Yeah, thank you, Ricardo, for that great answer. And we have a lot of questions coming in, so I'm gonna go through them really quickly and maybe bundle them into a few questions together for you to answer in the rest of our time. So Tanyu from our audience asked, in your opinion, what role could blockchain technologies play, if there's any roles that blockchain technologies can play in creating markets for regeneratively grown products and wide-scale adoption of regenerative agriculture?
Yeah. So I think there's probably a role. I think we're going to sort of fumble our way to an answer for this over the coming years. I would point you to two examples of groups trying to use blockchain in related spaces. One is a group called Nori out of Seattle, who's working on carbon in agriculture. They've created their own token using blockchain to symbolize carbon credits. And their whole mantra has been that the existing carbon market has not been great at channeling capital to small scale farmers, and they think they can do it better. And that the certification and verification processes are too cumbersome and too difficult. And so they're using blockchain as a way to help do that. You got to think that blockchain, one of the core concepts of blockchain is a system for generating trust. So it's a system where you can make transactions having less trust or more trust in this blockchain itself, right? That it is much more difficult to cheat using that blockchain. So I think in terms of generating that trust and certification schemes, we're going to see a lot of development in terms of blockchain. The other group that I would point you to is a group called Regen Networks, which is very deeply involved in generating a blockchain solution to regenerative agriculture. Also have sold carbon credits using sort of blockchain underpinnings for it, in one case to Microsoft. And they've actually, had an initial coin offering that basically generated millions of dollars for them to do the work they're doing. And they're using satellite systems to measure and monitor plots of land and putting, the carbon on the blockchain, again, to generate that trust and traceability of the information and manage the information. So I think there's a lot of different ways that blockchain is going to play into this, just as there are a lot of different ways that blockchain is going to affect pretty much everything we do, right? And is already affecting a lot of the different things we do. I don't think we've yet plumbed the depths of what blockchain might be able to do for this, just because I think there's a lot more to go. And if you take a step further into this concept of decentralized finance that is emerging because of the use of blockchain, which is basically, it's not that new in the sense that it is over collateralized lending. It's new in that it's using the blockchain to facilitate over collateralized lending. I think that's going to have a radical impact on not just how finance happens for regenerative agriculture, but how finance happens generally in the space, and may even threaten some of the larger financial institutions and the roles they play, may disintermediate some of them. So it'll be fascinating to watch. I think watch the space is the best I can do, because it's going to get interesting, not least of which how this will be regulated by the SEC or different governments, and whether these governments will put out decentralized currencies of their own, which they will, is my belief, and how that will affect other decentralized currencies. So I think when you're looking at blockchain, it's important to separate things like the way Bitcoin is kind of evolving, which is to be a kind of digital reserve currency in many ways. That's very different than, for instance, like the way Ethereum is developing with its smart contracts, which is a system for allowing machines to basically make decisions based on contracts. That smart contracting, I think, is going to have a much bigger impact on everything we do, including how we finance agriculture in the long run. So I'd keep an eye on the smart contracts as basically another network system, almost another layer of the internet that is going to change everything we do.
Yeah, thank you for the answer, Ricardo. And we have a lot of different types of questions, and we're going to shift gear a little bit into geographically. The opportunities existed outside of U.S. in regenerative agriculture. Roberto is interested in hearing why Latin America is not as attractive for impact investment for regenerative agriculture, or maybe why more opportunities exist in the U.S. versus outside of the U.S.
I don't know that I fully believe that more opportunities exist in the U.S. As opposed to outside of it. I think there's plenty of opportunities outside of it. I just think that from we're a U.S. company, and the U.S. is underinvested in regenerative agriculture, and it's a huge market, and the trends are moving in the right direction in the sense of consumer demand and interest in this. All of these factors say rather than the US being better than Latin America or Asia, it's just that the US is a very good opportunity. And one where you have a financial system that is much more efficient than in some places like Africa or elsewhere. So, there's a reason the Wright brothers didn't, launch their plane in a windstorm. You go where where there may be low hanging fruit and where the investments may actually be easier. And so I think that there's going to be a lot of interest in this space in the US in particular. But I think you're going to see all of that filter down to, India, China, Europe, Africa, Latin America, everywhere. But right now, there's a huge opportunity in the US. So that's the best I can answer.
Yeah. And we are also having a lot of audience members interested in learning if there are some other investment firms that you see that are active in the regenerative agriculture space, like Belton Farms or Regenerative Asset Management, Clear Frontier, and
Yeah.
your thoughts on those companies.
Yeah. There's quite a few emerging. I mentioned Replant Capital. There's one called SLM, Sustainable Land Management, which has done some work in the space, some interesting work. There's people all up and down this value chain emerging, and that I think is going to be, you're going to see more of them. There's people like Dirt Capital that are making loans into the space. There's people, there's a lot of different players in the space, and I'm happy to, if people reach out to me, I have we have a sort of running list of the players that we're seeing in there. There's almost too many to mention. Iroquois Valley Capital, even Peter Stein at Lime Timber, they've been doing some work on this space. A group called Conservation Resources, used to be called Conservation Forestry, also doing investments in this space. So many of the sort of forestry TMOs are moving into this as well. So I think there's a lot of people kind of feeling their way and dipping their toes into this, or launching products in the space. A group called Farm Raise is in the space. I think there's a lot of CSA groups on a more local level that are emerging, and that are morphing into how do they provide capital to their farmers. A lot of them have already been providing capital to the farmers. So pretty much everywhere you look, we're seeing developments in the space. It's going to emerge rapidly because of the interest in it from lots of different forms of capital.
Yeah, thank you, Ricardo. And speaking of other players in the space, just to our audience, our Yale team just wanted to jump in and take a moment to flag and promote another webinar series here. It's a very active podcast called Investing in Regenerative Agriculture and Food. And if you haven't heard about it, it's definitely worth a listen. And in that vein, Ricardo, could you also take a minute and speak to who you see as other interesting conveners, major non-financial actors, and all other educational or news resources that you think our audience should be aware of?
Yeah, again, it's almost too many to mention, right? Like you see all the major nonprofit groups, whether it's the Nature Conservancy, WWF, all of them have also realized the importance of agriculture and are getting involved. Lots of work on carbon and agriculture, like we mentioned. So how do the carbon markets relate to agriculture? Lots of stuff happening there. I've seen a bunch of convenings. There's one recently. Oh, I'm forgetting the name, but I'll try and look it up as we talk. But that brought together different players again on, what is regenerative. A lot of discussionings happening. I think a lot of the brands are also starting to facilitate discussions or partner with, like White Oak Pastures or other farms on the ground. I'm thinking of Cargill, and I'm thinking of some of the bigger groups. I mentioned Timberland. Timberland's been doing some really interesting work on, how do they promote regenerative in their supply chains. So a lot of the supply chain operators are getting involved. And I think it's incredibly important to pay attention to that supply chain. And here in the slide at the bottom left, you'll see a sort of supply chain mapped out. I think a lot of the capital right now has been going into land, as I mentioned. I think there's a lot more capital that needs to emerge in different parts of the supply chain. I actually think there's a bottom part of this circle, if we want to turn it into a cycle, which is how to bring nutrients back from the consumer to the farm, basically composting and that sort of thing. I don't think we've even begun to think about exactly how that happens on a better, more efficient, more scalable level. And that one's going to be huge, I think, in the future. So I think keep an eye on that supply chain, keep an eye on the different places that capital is needed. As I mentioned, the processor distributor parts of this are going to require actually some pretty sizable checks to upgrade production facilities and to make them linked to practices on the ground, right? Part of regenerative agriculture is about diversity of crops and diversity in the soil. And the diversity of crops means you need markets for crops that don't generally have markets. And, a lot of them are already producing specialty crops, not corn and soy, but they're going to be producing more of the variety of different specialty crops. Where are the markets for these? How do we commercialize that? Who's going to help the farmer sell some of those rotations that they need to do to increase soil fertility or what have you? Also, if we're serious about regenerative agriculture, we need to think about how we incorporate animals into these systems. And in a way, it's kind of back to the future of agriculture, how to bring animals much more intricately interconnected into these systems, and what does that look like, and how do we use those products, and what added complications does that bring? Because the entire agricultural revolution and the green revolution has been about mechanizing agriculture and about using different types of genetics for agriculture, and about making it much more of a big commodity that's easy and able to manage at scale. And it's brought us vast quantities of food. Just happens to be a lot of corn and soy and some of those big things. I think the next iteration of change has to be in a much more richer diversification of the agricultural system and going into the future. So there's a lot of options there, and a lot of different players who are getting involved from the regulatory, nonprofit, capital side.
Thank you. And let's take a shift over to questions about equity and distributional impacts in this space. Several have come in. A question from our audience is Mini. One of the biggest critique I've heard of regenerative agriculture is its appropriation of indigenous or traditional knowledge and rebranding it as a new system or idea. How can we use investments or other mechanisms to best support farmers and communities that have traditionally utilized regenerative practices but have been historically disenfranchised via land rights, the US Farm Bill, and international ag policy, and therefore outcompeted by the conventional systems? And also, do you think the regenerative agriculture movement is generally becoming more inclusive?
I think so, but I think it's partly because there's a lot more interest in this type of inclusivity than there has been in the past, just generally. I think there's an opportunity to do this right, and to try to bring capital to underserved communities. I would highlight that I think there's going to be a big role for in the U.S. institutions that are known as CDFIs, Community Development Financial Institutions. There's a number of CDFIs. Generally speaking, CDFIs were created as a result of sort of redlining in the banking industry, which is basically institutionalized racism in the banking industry, channeling capital away from underserved communities and minorities. And so the government regulated that and said, we're going to create these institutions called community development financial institutions. Many of the early ones were in urban areas, but there's a bunch of newer ones that have developed in rural agricultural areas aimed at agricultural, of providing capital to agricultural borrowers. And there's even indigenous CDFIs emerging now, which are groups that are aimed at providing capital into indigenous communities, because as you rightly point out, many of them have had these types of more regenerative practices for a long, long time. And so I think, how do we make sure that they are able to catch this new interest in regenerative? I think it's an incredibly important one. And then there's a whole host of questions around, how do we make the institutions that are created in here more inclusive, more diverse themselves, right? So how do we ensure that we're supporting, minority founders? How do we make sure that there's the right types of diversity on the board? I think a lot of the small farmers in many parts of the country are also, minority farmers. How do we ensure that they get the type of support they need, and how do they make sure that they are able to scale to the point where they want to be scaled? Because some of them may not want to scale, or may feel that the scale changes the way they're doing their work. But how do we help them, support them? All of these are big questions, but I would argue that they're not necessarily big questions that differ from any other aspect of our financial world. The same can be said for clean tech. The same can be said for any area of investment. We just need to pay close attention to how this is happening. I would point you to the CDFIs as a fascinating vehicle that we need. It's one of the most important financial institutions you've never heard of. Important not because of size, because compared to the broader financial system, they're not very big, but important because of what they can do and the potential of where they can go. And if we could unlock them in a much bigger way, I think they're going to play a huge role on this particular question of how to bring more diversity, equity, and inclusion into not just the agricultural space, but every space of endeavor. I keep saying that one of the things I learned in the pandemic, particularly in the government's response to the pandemic, I'm thinking here of the PPP loans, was that our government is exceedingly good at putting capital into the arteries and veins of our economic system. So no problem money from government going to JP Morgan, Goldman Sachs, or any of the big players, right? Where it gets difficult is, how does that money actually flow to what I call the capillaries of the economic system, which are the smaller players and the smaller sources of capital that provide capital to, underserved communities, minority groups, farmers, et cetera. And I think CDFIs are an important layer of that capillary system that we need to pay closer attention to.
Thank you so much, Ricardo, and thank you all the audience for all the amazing questions and this great discussion. We are reaching the end of our webinar session, and before we wrap up, Ricardo, do you have any final comments, or if our audience wanted to get in touch with you, is there any form of communications?
Yeah, people should feel free to reach out to me on LinkedIn or on via email. My email is basically first initial, last name, rbayon at encouragecapital.com, all one word. You can feel free to reach out to me. I don't know about you, Angela, but I could stay and answer a few more questions if you want. If people are willing to or interested in, I'm happy to try and do that.
Yes, unfortunately, our webinar session is recorded and only for an hour of time. We can have a follow-up session in the future and continue our conversation around regenerative agriculture. I know there's a lot of interest from our audience that would love to hear a follow-up conversation from you. Thank you so much, Ricardo. And that concludes our webinar on the future of investing in regenerative agriculture. Ricardo, thank you so much for joining us today, and looking forward to speaking with you again in the future around this topic. And for our audience, to view a recording of this webinar, please visit the events tab on the Yale Center for Business and the Environment website or our YouTube channel. And thank you for joining us. Until next time, this is Angela Xue from Center for Business and the Environment at Yale. Take care and have a great rest of your day.
Thank
Bye-bye.
you, Angela. Take care. Thanks for having me.